Usually when the annual Social Security reports drop, we all kind of scramble to look at one specific number.
Right, the COLA.
Exactly, the cost of living adjustment. We want to know the percentage. We do the quick math on the monthly increase, and then, we move on. But looking at the report we're diving into today.
The key shifts in the U.S. Social Security System 2025.
Yeah, that one. Fixating on the CLA is actually, it's a huge mistake. The math is honestly the least interesting part of this document. It reads more like a courtroom drama or a financial thriller.
It really does. I mean, if you only look at the percentages, you completely miss the earthquake. What we are seeing in 2025 is a fundamental restructuring of the regulatory landscape in Washington. We aren't just talking about, how much money is in the check. We are talking about who actually has the power to decide who gets a check in the first place.
And that is the mission for this deep dive. We need to decode 3 specific massive changes for you. We've got a Supreme Court ruling that effectively rewrites the rule book for the Social Security Administration. We have the repeal of the WEP and GPO penalties.
Which is just huge for public servants.
Huge. And then we have the hidden mechanics behind these stimulus proposals that are floating around in the news. I'm honestly just excited to finally understand the why behind all these clickbait headlines.
Well, and I want to be clear right up front, this isn't just a dry policy review. This is about financial defense. The source material highlights some serious traps, specifically regarding asset limits and tax implications that just aren't making the evening news.
Yeah.
If you don't understand the mechanics of this, you could end up with a check in one hand and a disqualification letter in the other.
That is a terrifying thought, and we are going to break down exactly how that happens. But let's start with the legal shift. The report opens by discussing the end of the, quote, unchecked bureaucracy. And it ties this directly to the Supreme Court overturning something called the Chevron deference doctrine. So for listeners who haven't been glued to the Supreme Court docket, why is a legal theory about deference so critical to an everyday Social Security recipient?
Right. It sounds super abstract, but it's incredibly practical.
Mm-hmm.
So for about 40 years, under Chevron, if a law regarding Social Security was ambiguous or vague, the courts were essentially required to defer to the agency's interpretation.
Okay.
If the SSA said, we think the law means X, the judge would basically say, well, you're the expert, so X it is.
So the SSA was essentially grading its own homework. Like, if Congress wrote a sloppy law, the SSA got to decide what it meant, and the courts just nodded along.
In practice, yeah, pretty much. It gave the agency immense power to just move the goalposts.
Wow.
Yeah, if they needed to tighten the budget, they could interpret a disability rule more strictly. And it's very hard to challenge that in court because the legal standard was just whether their interpretation was reasonable, not whether it was actually the best reading of the law.
And now that Chevron is gone, thanks to the Lippert-Bright ruling that the source mentions, that default win for the agency is just gone too.
It's completely gone. The report highlights that the courts now have to exercise independent judgment. The SSA doesn't get the benefit of the doubt anymore.
So they have to actually prove their case.
Exactly. They have to walk into court and prove that their interpretation of the rules is legally correct, not just administratively convenient for them.
Okay, I see the legal distinction there, but let's play devil's advocate for a second. The Social Security Administration is a massive ship. It turns very slowly.
Very slowly.
Does the Supreme Court ruling actually change the experience for someone who's, say, filing a claim tomorrow? Or is this just going to clog up the courts with years and years of litigation?
Well, that's the friction point, right? The source notes that in the short term, we might actually see more delays.
Because they're being overly cautious?
Exactly. The SSA knows they can't just rubber stamp denials anymore. They have to build bulletproof cases. However, for you, the individual, this provides a real right to appeal.
Meaning you actually have a shot at winning now.
Right. The playing field is finally level. Before, appealing against the SSA felt like fighting gravity. Now, if you have a solid reading of the law that contradicts their internal manual, a judge is legally obligated to listen to you.
The report actually calls this the end of the judge, jury, and executioner era.
Yes, I love that phrasing. It forces the whole system to operate with transparency because every internal memo or policy tweak is now vulnerable to public judicial review.
That is a pivotal shift. It moves us from a system of just administrative fiat to an actual system of law. But speaking of systems that seem to work against the user, let's pivot to the money.
Let's do it.
This is the topic that is just flooding everyone's news feeds right now. Stimulus checks, bonus payments. The report outlines proposals ranging from $400 to $2,000 for seniors.
Yeah, this is where we really have to separate the signal from the noise. The source material calls this the election year intersection of expectation and reality.
Right, because it's an election year.
Exactly. These proposals are definitely real bills, they exist, and they are targeted specifically at low-income seniors.
Yeah.
Generally, we're talking about people earning under roughly $1,800 to $2,000 a month.
Which makes total sense politically. You target the demographic that is struggling the absolute most with inflation.
Right.
But I'm looking at the analysis here, and the expert commentary suggests that actually receiving this money could be a disaster for some people. They call it a financial Trojan horse.
It is a classic case of unintended consequences. Think about who qualifies for a stimulus check based on having a low income. These are often the exact same people relying on other means-tested programs.
Like Medicaid.
Medicaid, SNAP, which is food stamps, SSI, or housing assistance.
And those programs have strict limits on how much cash you can actually have in the bank.
Extremely strict. And this is the detail that most people, and honestly most politicians, completely miss. The asset limit for SSI, which is $2,000 for an individual and $3,000 for a couple, has not been updated since 1989.
Wait, 1989, that's nearly 40 years ago.
It has not been indexed for inflation at all. So just imagine this scenario. You are a low-income senior. You have maybe $500 in savings.
Yeah.
You are barely scraping by, so you rely on Medicaid to pay your medical bills and SNAP to buy your groceries. Suddenly, a well-meaning stimulus bill passes, and $2,000 drops directly into your bank account.
You now have $2,500. You are over the 1989 limit.
Boom. You are technically disqualified from SSI and potentially Medicaid.
Just like that.
Just like that. The computer system doesn't care that it was a government bonus. It just sees your assets exceeding the hard threshold.
So for a one-time payment of $2,000, you could lose health coverage that might be worth tens of thousands of dollars a year. That just seems like a fundamentally broken system.
It is an absolute asset trap. And the source material is emphatic about this. You simply cannot accept a cash windfall without doing the math on your eligibility thresholds first. The government agencies often don't talk to each other effectively.
So the IRS sends the check.
Right, the IRS sends the money. But then the SSA, or your state Medicaid office, runs a routine bank check and triggers the suspension of your health benefits.
Wow. So the advice isn't necessarily don't take the money, it's know the cost of taking it.
The advice is to be highly strategic. The report suggests that if such a bill passes, there may be spend-down provisions allowing you to use that money immediately for specific debts to get back under the asset limit.
Like paying off a medical bill right away.
Exactly.
Yeah.
But you have to know to do that. If you just let it sit in your savings account for a rainy day,
Yeah.
you are literally walking into a trap.
That is exactly the kind of detail that doesn't fit on a bumper sticker, but it literally saves your financial life.
Absolutely.
Let's move to something that feels like a much clearer win, though knowing this report, I suspect you're going to tell me there's a catch there too.
There usually is.
The Social Security Fairness Act, signed late in 2024. This repeals the WEP and the GPO.
This is genuinely a massive victory. We are talking about teachers, firefighters, police officers, public servants who have been penalized for decades.
Let's briefly define those acronyms again for clarity, because they are pretty dense. WEP is the windfall elimination provision.
Right. WEP affected people who had a split career. So maybe you spent 15 years in the private sector paying Social Security taxes.
Yep.
And then you spent 15 years as a teacher in a district that had its own pension but didn't pay into Social Security.
Right, that happens a lot.
Previously, the SSA looked at your teacher's pension and said, we're going to slash your Social Security benefit because you're double dipping.
Even though you earned both of those benefits entirely separately?
Exactly. It was this formula that disproportionately hurt moderate income workers. The Fairness Act scraps that completely. You get what you earned. And the GPO, the government pension offset, was honestly even harsher. It targeted spousal and survivor benefits.
This is the one where widows were losing like 2/3 of their survivor benefits, right?
Yes. If a widow had her own small government pension, the SSA would offset her survivor benefit from her deceased spouse by 2/3 of that pension amount.
That's devastating.
In many cases, it wiped out the survivor benefit entirely, leaving them with nothing from their spouse's record. But that is now gone.
Okay, so the penalties are gone. People are finally going to get their full benefits. Where is the catch you hinted at? Because the report explicitly mentions a tax bomb.
The catch is in the implementation, specifically regarding retroactive payments. Because this law passed late in 2024, and the SSA is dealing with, let's just say, ancient IT systems, they aren't just flipping a switch.
Right, it takes time.
Many people are owed back pay for the months between the law actually taking effect and the computer system updating to reflect it.
And when the government pays you back pay, they usually just write one big check.
Correct. And under the standard receipt doctrine of the IRS, you are taxed on income in the year you receive it, not the year you earned it.
Oh, I see where this is going.
So let's say you were owed $30,000 in back benefits. If that hits your account all at once in 2025, it sits right on top of your normal income for the year.
Pushing you into a higher tax bracket.
Potentially a much higher bracket.
Yeah.
And it could also trigger higher premiums for Medicare Part B because those are income-based.
So that's the bomb.
That's the bomb. You finally get your money, you celebrate, but the IRS takes a massive bite, and your insurance costs suddenly go up.
Is there a workaround for that? Or are you just stuck paying the penalty for the government's own administrative delay?
This is where we have to get a little bit into the weeds of the tax code, but it's so worth it. The source mentions that for Social Security lump sum payments specifically, there is a provision. You can ask your accountant about recalculating the past liability.
This is the lump sum election method.
Yes. It essentially allows you to figure the tax as if you had received the money in the earlier years it was supposed to be paid, rather than piling it all into the current year.
So it effectively spreads the income out retroactively.
Exactly.
But, and I'm guessing this is the key part, you have to affirmatively choose to do that. The IRS isn't going to do it for you automatically.
Oh, the IRS will happily tax you at the highest possible rate if you don't file the right paperwork. The standard 1099 form you get in the mail might not make this obvious at all. You have to know that Section 86 of the tax code exists.
Wow.
This is exactly why the report says, don't just spend the check, talk to a CPA first.
That distinction, just knowing that you can reallocate that income, is probably worth thousands of dollars to the people listening right now. It's another example of how the headlines say victory, but the fine print says be careful.
It is the recurring theme of this entire deep dive. The system is becoming more fair, legally, but it is also becoming way more complex administratively, which actually brings us to the confusion surrounding dates, specifically March 6th.
Oh yes, the March 6th rumor. If you go on any social media platform right now, there are posts claiming this is some kind of national stimulus day.
It is the viral myth of the month. Let's correct the record right here. March 6th is an internal administrative deadline for the SSA. It is the target date for clearing specific error backlogs and processing certain adjustment batches. It is absolutely not a universal payday.
So if you are checking your mailbox on March 6th expecting a big bonus check, you are going to be very disappointed.
And you might be vulnerable.
How so?
The report has a scam alert specifically tied to this exact date. Scammers know that seniors are hearing the date March 6 floating around, so they are actively calling people, posing as SSA agents, and saying things like, we need to verify your bank routing number to ensure your March 6 deposit goes through.
That is so insidious. It takes a tiny grain of truth, the fact that the date exists in the system, and wraps a massive lie around it.
That is how the best social engineering works. The golden rule remains unchanged. The SSA will never call you out of the blue to ask for your social security number or your banking details.
Never.
If you get that call, just hang up. If you're genuinely worried about your account, look up the official number, 1-800-772-1213, and call them yourself.
Let's talk about the COLA again briefly in this context of reality versus rumors. We mentioned the math earlier. The adjustment is 2.5%. The report makes this really interesting distinction between a mathematical increase and a functional decrease. Can you unpack that?
Sure. It's the difference between what the government spreadsheet says and what the grocery store checkout line says. Mathematically, 2.5% is a positive number. You are getting more dollars in your check.
Right.
But the basket of goods that seniors actually buy, healthcare, utilities, food, those have seen inflation rates significantly higher than 2.5%.
So your purchasing power is actually dropping even though your nominal check is rising.
Precisely. You are functionally poorer month over month. The report argues that the formula used to calculate the COLA, the CPIW, is fundamentally flawed because it tracks the spending habits of urban wage earners.
Who aren't retired.
Right. It doesn't track retirees who spend a vastly larger portion of their income on medical care and heating their homes.
So until that formula changes, we are stuck in this loop of shrinking purchasing power. Which really leads us to the biggest structural issue of all. The report has a section titled The Long View, the 2033 CLIFE. We hear about insolvency constantly. Is this year's report any more optimistic?
It's actually more urgent. The 2033 cliff refers to the projected depletion of the trust fund reserves.
Okay.
If Congress does nothing, literally takes zero action between now and then, the law mandates an automatic cut across the board. The current projection is a cut of roughly 20 to 25%.
An automatic 25% pay cut. That's not a political decision that someone has to vote on. That's just a mathematical trigger.
It is the default setting built into the law. If the savings account hits zero, they can only pay out what comes in via tax revenue that specific year. And the incoming revenue only covers about 75 to 80% of the promised benefits.
This brings up that three-legged stool metaphor the expert uses in the text.
Right. The traditional view of retirement stability was a stool with three equal legs: Social Security, a pension, and personal savings.
But pensions are functionally extinct for the private sector today.
Exactly. One leg is just gone. And personal savings have been totally ravaged by inflation for a lot of people over the last few years. So the stool is basically wobbling on just the Social Security leg alone.
That's a scary visual.
It is. The report argues we have to stop viewing Social Security as the sole foundation of retirement and start viewing it as a supplement, even though I know that it's incredibly difficult for current retirees to hear.
So, knowing all of this, the legal changes with Chevron, the tax traps with WEP, the insolvency risk in 2033, what is the actual action plan? The source provides a strategic action list. Let's walk through those three key steps.
Step one is the personal audit. This goes right back to the error correction we discussed. You need to log into SAA.gov and look at your earnings record.
Why is that so critical right now, specifically?
Because the SSA's modernization efforts are revealing a lot of historical data gaps.
Really?
Oh, yeah. If an employer reported your income wrong 15 years ago, or simply transposed a number on a form, your benefit check today is lower than it should be. And the report notes that fixing these errors gets exponentially harder the longer you wait.
So don't just assume the government's math is right. Go check the earnings column yourself. Got it. What's step two?
Information hygiene. This refers to avoiding the anxiety cycle of social media. The specific recommendation is to subscribe to the newsletters of your local congressional representative.
That sounds pretty dry.
It is incredibly dry, but it's accurate. That is where you get the actual text of bills like the Fairness Act. That is where you find out about local town halls. Relying on Facebook for Social Security news is like relying on a game of telephone for complex medical advice.
Fair point. Go straight to the source. And step three.
The panic buffer. The expert advises building a specific emergency fund of $1,000 to $2,000 kept completely separate from your primary checking account.
Is this just the standard save for a rainy day financial advice?
It's more specific than that. This is an administrative buffer. We talked about the legal delays, the IT backlog, the potential for a rogue stimulus check to freeze your other benefits while you sort out an asset limit issue.
Right.
You need a buffer that allows you to financially survive for 30 to 60 days while the bureaucracy fixes a mistake.
That makes total sense. It's not just for a flat tire on your car. It's for when the SSA computer freezes your account by accident.
Exactly. It buys you the time to fight the administrative battle without going hungry or missing rent.
So to summarize this deep dive for you listening, the headlines are totally distracting us from the real shifts. The Supreme Court has given you a powerful new weapon to appeal unfair decisions, so you should use it.
Yes.
The stimulus checks are incredibly dangerous if you don't watch your asset limits. The WEP repeal is a massive win, but you need an accountant to handle the resulting tax bomb. And please ignore everything you hear about March 6th.
That is the perfect recap.
It really feels like the overarching theme here is that the system is getting more legalistic. It's less of a passive safety net you just fall into, and more of an active benefit you have to manage.
I completely agree. The era of passive receipt is over. I actually want to leave the listener with a quote from the conclusion of the report that I think frames this perfectly.
Go ahead.
It says, "Financial peace never comes from a government check. It comes from understanding your money and refusing to let fear dictate your decisions. In this game, the person with the right information holds the power."
The person with the right information holds the power. I love that. That is exactly why we do these deep dives, to give you the information that the headlines always leave out. Thank you for listening. Go audit your earnings record at safa.gov right now. Seriously, do it today, and we will see you on the next one.